The trade battlefield has shifted, and America finds itself bleeding from wounds inflicted not by foreign treasuries, but by its own leadership. Donald Trump once marched into the global stage declaring that tariffs would make other nations pay the price. Dollar for dollar, tariff for tariff, he thundered, promising that America would never bow again. But behind the slogans and the headlines, a different truth has emerged. The very tariffs he celebrates like trophies are not paid by China, Canada, or Europe. They are quietly siphoned from American pockets, draining households, suffocating small businesses, and rattling the foundation of the world's largest economy. Trump's administration has imposed tariffs at levels unseen since the Great Depression. The White House boasts about billions flowing into federal coffers, claiming nearly $50 billion a month in tariff revenue. Yet the numbers don't lie. The checks are being written not in Beijing or Ottawa, but at American docks, signed by American companies, and ultimately carried by American families at the checkout counter. This is not patriotic revenue, it's a hidden tax hike, one never voted on by Congress or approved by the American people. Walmart, Volvo, Adidas, and countless other corporations have sounded the alarm. Prices are climbing on everything from groceries to clothes to cars. Independent studies from Yale's Budget Lab and the Penn-Wharton model show the average U.S. household is now paying between $2.400 and $3.800 more every year because of tariffs. Over a lifetime, that adds up to more than $22 sucked from family budgets. These are not abstract numbers buried in an economist's report. They are the rising cost of school shoes, now 40% higher. They are clothes up 38% in price, gasping wallets in middle-class neighborhoods, and grocery bills that creep higher week after week. The Washington Post and AP News both confirmed this impact. Every container unloaded in New York, Los Angeles, or Miami carries a hidden bill, an unavoidable cost businesses must absorb or pass along. When they can no longer absorb it, the consumer pays. The outcome? Higher prices, disappearing jobs, and small-town economies starved of oxygen. This is not making America great again. This is forcing America to pay again and again, while its closest neighbors quietly adapt and outmaneuver Washington's chaos. Canada, once seen as tethered to the U.S. market, is no longer bowing. The country has mastered the rules of the game and is now playing it with greater precision. Under the structure of the USMCA, 92% of Canadian exports still enter the United States duty-free. Only 8% of trade faces punishing tariffs, averaging around 30%, while steel and aluminum producers struggle. The overall effect on Canada's economy has been minimal. In fact, Canada is diversifying its trade portfolio, redirecting shipments to Europe and Asia, building infrastructure at home, and reinforcing its domestic industries. Ontario's premier bluntly summed up the sentiment when asked about Trump. He's probably the most disliked politician in the world in Canada. Polls confirm it. Canadians are not only angry at Washington, they are turning that frustration into action. According to Angus Reid, 59% of Canadians support stronger counter-tariffs. In April and May alone, Ottawa raked in $2.4 billion in revenue, a staggering 179% increase from the previous year. In March, countermeasures collected an additional $617 million in duties. Public support isn't just passive, it's pushing the government to hit back harder. 91% of Canadians now say they want to reduce reliance on the U.S. as a trading partner. Meanwhile, Trump's gamble grows more dangerous. A 100% tariff on chips and semiconductors has been announced, a blunt instrument aimed at forcing high-tech manufacturing back to American soil. But this isn't strategy. It's high-stakes roulette with the backbone of modern industry. In 2024 alone, the U.S. imported over $60 billion worth of chips from suppliers like Taiwan and Malaysia. Experts warn that imposing such tariffs will cause prices and production costs to skyrocket. While giants like Apple or Samsung may weather the storm due to their U.S. investments, Smaller firms across Asia and Europe could collapse. Factories cannot be rebuilt overnight. And highly skilled workers do not appear on command because a politician demands it. While Washington swings its hammer, Ottawa is engineering a smarter defense. Canadian exporters have shifted course. Shipments to the U.S. dropped by 6.6%, but exports to the European Union rose by 24.8%, and to ASEAN nations by 11.2%. This is not a short-term pivot. It is a deliberate strategy to reduce dependence on an unstable partner. At home, the Canada Infrastructure Bank has been tasked with deploying $35 billion CAD by 2028. Leveraging private investment in transport, rail, and energy. The goal is resilience, an economic firewall against global turbulence. The contrast is glaring. Trump parades tariffs as if they were weapons of dominance. But in practice they resemble boomerangs, striking hardest at home. Canada, by contrast, has turned every threat into a reason to build, to diversify, to strengthen. While America drifts deeper into a storm of its own making, its northern neighbor is quietly installing a state-of-the-art sprinkler system, preparing to withstand whatever fire Washington sets next. Momentum is not built on speeches. It is forged in steel, cement, and policy. While Trump's White House hurls tariffs like a blunt weapon, Canada is quietly stacking bricks, building walls of resilience. We are focusing at home. Canadian leaders repeat, a mantra that has turned into strategy. They no longer wait for Washington's approval. Instead, they are investing billions into their own security, industry, and infrastructure, insulating their economy from the erratic swings of U.S. politics. Take the forest products sector. When the U.S. threatened to raise lumber tariffs from 14.4% to a punishing 34.45%, Ottawa didn't fold. It unleashed a $1.22 billion CAD support package, $700 million in loan guarantees and $500 million for product development and market diversification. The message was clear. Canada would not beg. It would innovate, defend, and diversify. Defense tells the same story. In its 2025-2026 budget, Canada committed an additional $9 billion CAD, pushing defense spending to 2% of GDP, meeting NATO's target 5 years ahead of schedule. This wasn't just a military adjustment. It was a political signal. Canada will no longer rely on Washington's mood swings for its security. By strengthening its own foundations, Canada has transformed Trump's unpredictability from a threat into motivation. Contrast this with the U.S. tariff first, think later strategy. Trump boasted about billions pouring into federal coffers. But the truth is stark. Every dollar collected is a dollar lost for American businesses and consumers. According to Yale University's latest report, tariffs are slicing nearly $2 from household purchasing power. Families brace for 40% higher shoe prices, 38% more for clothing, and ever-rising grocery bills. With median U.S. household income around $74.580 a year. These tariffs strip roughly $2.500 annually from family budgets, a slow bleed that cuts deeper each month. For Canada, USMCA remains its shield. 92% of exports still cross the border tariff-free, compared to only 6% that face a crushing 35% tariff rate. Energy exports remain entirely exempt. According to RBC Economics, the average effective U.S. tariff on Canadian goods sits at 2.4%, compared to 8.9% for other nations. That gap is not luck. It's the product of careful negotiation, diversified trade deals, and calculated resilience. And Canadians aren't just tolerating this fight, they're fueling it. Polls show 65% now avoid travel to the U.S. and 67% deliberately avoid U.S.-made products. This is not passive disapproval. It is economic activism on a national scale. The Financial Times reports that Ottawa's countermeasures collected $617 million in March alone. Each dollar is both a shield and a sword, proof that retaliation can be strategic. not reckless. Trump's 100% chip tariff highlights the fundamental flaw in his approach. The U.S. imported $60 billion in chips in 2024. Overnight, slapping a 100% tariff doubles costs for industries dependent on global supply chains. Factories cannot relocate instantly, nor can skilled engineers be conjured out of thin air. According to Reuters, while giants like Apple or TSMC may sidestep tariffs due to U.S. investments, smaller Asian and European firms will be crushed. The result? Higher costs, disrupted supply lines, and a U.S. technology sector stumbling at the exact moment China and Europe are racing ahead. Meanwhile, Canada is leveraging the chaos. Exports to the EU climbed 24.8%. ASEAN shipments rose 11.2%. The Canada Infrastructure Bank, armed with $35 billion CAD through 2028, is mobilizing private investment into rail, transport, and energy. Projects like the Cedar LNG plant showcase Canada's blueprint for the future. The largest Indigenous-owned energy project in North America, Cedar LNG is designed with electrification to keep emissions low, displace dirtier LNG from less responsible jurisdictions, and give Canada direct access to Asian markets. This is not just economics, it's liberation. By empowering Indigenous ownership, diversifying exports, and reducing dependence on U.S. buyers, Canada is entangling itself from decades of reliance. Reuters reports that between May 2024 and May 2025, the share of exports going to the U.S. dropped by 10 percentage points, now at about 68%. Ottawa's stated goal is even bolder: boost non-U.S. exports by 50% in 2025, reaching nearly $292 billion USD with a sharp focus on Europe and Asia. To fuel this transition, the Canadian government has launched a $5 billion CAD loan guarantee program aimed at increasing Indigenous participation in clean energy. Alongside it, the Asia-Pacific Gateway and Corridor Initiative is expanding maritime, road, and rail infrastructure, linking Canadian resources directly to Asian markets faster and cheaper than ever before. Every move signals the same message: Canada will no longer let its economic fate hinge on one man's signature in Washington. It will build, defend, and expand on its own terms. Trump's tariffs may be designed to destabilize, but Canada's strategy is to fortify, to turn every American misstep into a Canadian advantage. The scoreboard is brutal. And it doesn't lie. American companies are bleeding while Canada counts opportunities. GM, Ford, and Apple are not just posting billion-dollar losses for fun. These are cascading hits that roll downhill, flattening suppliers, eliminating jobs, and hollowing out small-town economies that once depended on factory paychecks. Trump's tariffs were sold as a path to strength. In reality, they've become a slow-acting poison, eroding the very foundation of the economy he swore to protect. Canadians, on the other hand, are watching the chaos unfold like spectators with front-row tickets to the art of the trade blunder. Instead of panicking, Ottawa is building its firewall, protecting domestic industries, signing deals abroad, and making sure no tariff tantrum from Washington can knock it off balance. It's the image of two neighbors, one setting their own kitchen on fire, the other quietly installing a world-class sprinkler system next door. Doug Ford, Ontario's premier, put it bluntly: Trump is probably the most disliked politician in the world in Canada. And polls back him up. According to Pew Research, only 22% of Canadians trust Trump to handle global affairs responsibly. 64% now hold an unfavorable view of the U.S., while positive sentiment has collapsed to just 34%, a staggering 20-point drop from the year before. Politico polling shows 3/4 of Canadians outright dislike Trump, while only 15% would support him if they had a ballot in American elections. This deep political distaste has become a shield for Canadian leaders, no longer forced to tiptoe around Washington for fear of backlash. Ottawa can push back aggressively, knowing the public has its back. In fact, Public opinion is not just supportive, it's demanding action. CTV News reports that countermeasures in March alone netted Canada an extra $617 million in duties compared to the prior year. Financial Times notes that 91% of Canadians favor reducing dependence on the U.S. as a trade partner. These numbers aren't symbolic, they're leverage. Meanwhile, the U.S. economy is unraveling under the very policies Trump praised as victories. Nearly 37,000 Americans have lost their jobs directly due to tariffs. Families unable to pay rent or mortgages are cutting back on groceries just to stay afloat. The national unemployment rate has spiked to 4.8%, the highest in 7 years. Traditional industries, autos, steel, aluminum, have shed tens of thousands of jobs in just 6 months. Imported cars now cost nearly $6 more per vehicle. Consumer goods across the board have surged between 12% and 15%. Oxford Economics and Bloomberg Economics forecast a GDP decline of at least 1.2% in the first year of tariffs, with core inflation rising another 0.7%. Foreign investors, alarmed by instability, have pulled more than $200 billion out of the U.S. in just 8 months, the largest capital flight since the 2008 financial crisis. America's share of global exports has slipped 2 percentage points to 8.9%, the lowest since World War II. And yet, Canada is seizing the storm. In May 2025 alone, exports to Germany jumped 46%, to Japan 23%, to the UK more than 300%, to South Korea 5%, to the Netherlands 87%, and to Italy over 100%. Overall, Canadian exports rose 1% year-over-year, even as exports to the U.S. plunged nearly 16%, their lowest level since the pandemic. Instead of collapse, Canada recorded growth. Instead of layoffs, its export sector saw employment rise slightly, powered by new markets and a surge of international demand. This pivot wasn't limited to timber or minerals. Canada has emerged as a powerhouse in LNG, seafood, and high-tech agriculture. The completion of the $40 billion LNG Canada project gave Ottawa direct pipelines to Asia and Europe, bypassing U.S. infrastructure entirely. No longer shackled to American pipelines and price politics, Canada has carved out a role as a northern energy hub. At home, Canadian consumers are embracing this national shift. Retailers are stocking more European and Asian goods, replacing U.S. imports. Shoppers consciously avoid American products. According to Abacus data, 67% of Canadians now steer clear of U.S.-made items. This grassroots push has amplified Ottawa's trade strategy, creating a self-reinforcing cycle of resilience. Foreign investment tells the same story. Multinationals like Ford, Toyota, Stellantis, and Bombardier are expanding or relocating production in Canada to avoid U.S. tariffs. Since early 2025, foreign direct investment in Canada has surged by $18 billion, creating thousands of high-quality jobs. Canada's unemployment remains under 5.1%, even as America's climbs. For the first time in history, more than 30% of Canadian exports are now directed outside the U.S., a milestone of independence. The symbolism is striking. Washington slams doors with tariffs, while Ottawa opens new ones in Asia, Europe, and beyond. Every time Trump raises a wall, Canada builds a bridge. The result is a tectonic shift in North American trade. Nearly $700 billion in trade and investment has already flowed out of the U.S. and into Canada and Mexico over just 18 months. In June, the world saw an unprecedented image. Canadian and Mexican delegations meeting in Mexico City for bilateral trade talks, deliberately excluding the United States. For decades, the U.S. was the gravitational center of North American economics. Now, it's being sidelined in its own backyard. Canada and Mexico, once considered dependent, are forging their own alliance, sharing the benefits while Washington isolates itself. Trump's tariff tantrums have not only fractured the U.S.-Canada relationship, They've cracked the foundation of the entire USMCA framework. By the first quarter of 2025, U.S. exports had already dropped 4%. By May, the trade deficit had soared 18.7%, hitting levels not seen since the 2008 collapse. Corporate giants like Apple, Colgate-Palmolive, and Stanley Black & Decker were posting quarterly losses in the hundreds of millions. Walmart and Best Buy were forced to raise prices. Nike and Crocs saw margins evaporate. This wasn't a ripple effect, it was a tidal wave. And it was ordinary American families who found themselves drowning. Put yourself in Ottawa's shoes. For decades, 70 to 75% of Canada's total exports flowed south, tied to the volatility of the American economy. When Washington slapped down tariffs, analysts predicted collapse, recession, even a domino effect that would drag Canada under. But the story flipped. Instead of bending, Canada pivoted. Instead of crumbling, it grew stronger. Between January and May 2025, exports to the U.S. dropped nearly 16%, the sharpest fall since the pandemic. Yet Canada's total exports still rose 1% compared to the previous year. The reason? Strategic redirection. Exports to Japan soared 23%, to Germany 46%, to the Netherlands 87%, to the UK an astonishing 300%. South Korea climbed 5%, Italy over 100%. Canada transformed what was meant to be punishment into an opportunity to dominate new markets. The LNG Canada project, a $40 billion investment, cemented Ottawa's independence. For the first time, Canada could ship natural gas directly to Asia and Europe, bypassing U.S. pipelines, prices, and politics. Combined with seafood and high-tech agriculture, Canada was no longer a shadow economy of the U.S. It was emerging as a northern hub of energy and resources for the world. Domestic resilience has kept pace. Labor data shows jobs in Canada's export sector didn't collapse, they rose. New markets meant new contracts, new orders, and new hires. Meanwhile, foreign corporations, weary of Trump's tariff traps, are shifting to Canada. Since early 2025, $18 billion in foreign direct investment has flowed north, creating thousands of jobs in Ontario, Quebec, and British Columbia. Toyota, Stellantis, Ford, and Bombardier all expanded plants on Canadian soil, bypassing America's turmoil. The U.S., by contrast, is suffocating under its own policies. Consumer goods are up 12 to 15% on average. Imported cars now cost nearly $6 more. Layoffs in steel, aluminum, and autos reached 50,000 workers in 6 months. Inflation has climbed another 0.7%. The unemployment rate sits at 4.8%, its highest in 7 years. Exports fell 4% in Q1 2025, while the trade deficit ballooned 18.7% in May alone, pushing it past $900 billion, a modern record. Foreign investors have yanked $200 billion out of U.S. markets in just 8 months. The worst capital flight since 2008. America's global export market share has slid to 8.9%, its lowest since World War II. Meanwhile, Canada is celebrating a milestone. For the first time in history, over 30% of its exports now go to countries other than the U.S. That share is only growing. Ottawa has set a goal to boost non-U.S. exports by 50% in 2025, reaching $292 billion. With heavy emphasis on Asia and Europe, every percentage point that shifts is another chain cut loose from Washington's grip. This isn't just economics, it's political liberation. Canadians have embraced the shift with a near-nationalist fervor. Abacus data shows 67% now actively avoid American products. 65% avoid travel to the U.S. 91% demand reduced reliance on Washington. In the aisles of Canadian supermarkets, U.S. goods are being replaced by European, Asian, and domestic alternatives. What began as a response to tariffs has become a movement. Trump's tariff war has fractured the North American order. Nearly $700 billion in trade and investment has flowed into Canada and Mexico over 18 months. The most telling image came in June. Canadian and Mexican delegations meeting in Mexico City for bilateral trade talks, without the U.S. for the first time in decades. Washington was excluded from the North American table. The symbolism is devastating. The U.S. once held the gravitational pull of the continent. Now, Canada and Mexico are realigning, forging new trade arteries while Washington isolates itself. Tariffs that were meant to restore American dominance are instead pushing it to the sidelines. For everyday Americans, the reality is harsher still. 37,000 jobs already gone. Families drowning in debt to keep up with higher prices. Mortgage payments missed. Groceries cut back. Each tariff that was supposed to punish China or Canada has landed squarely on their shoulders. It is not Beijing paying the bill. It is Springfield, Des Moines, and Cleveland. For Canada, the storm has become a proving ground. Ottawa is not only surviving, it is thriving. By investing in infrastructure, embracing clean energy, empowering Indigenous ownership, and opening doors to Europe and Asia, Canada has crafted a blueprint for independence. Every move widens the gap between America's bluster and Canada's quiet strategy. Trump's tariffs were meant to bend allies into submission. Instead, they forged resilience. They were meant to weaken Canada. Instead, they strengthened it. They were meant to bring jobs home to the U.S. instead. They drove investment away. In the end, this is more than a trade war. It is a lesson in leadership. America has chosen tariffs first, thought later, wielding a hammer in search of nails. Canada has chosen calculation, diversification, and resilience. One path bleeds households and hollows industries. The other builds strength brick by brick, market by market. The future of North America no longer rests solely in Washington. It is being rewritten in Ottawa, in Mexico City, and in boardrooms across Europe and Asia. As Trump clings to his tariff trophies, Canada is already moving forward, securing markets, strengthening defenses, and charting its own course. The scoreboard is clear. Washington's chaos has cost America billions, jobs, and global standing. Canada has turned the same chaos into leverage, independence, and growth. And when history judges this era, it will see a nation that set its own kitchen ablaze, and a neighbor that quietly built a fireproof house next door.